In addition to clear and quick swing points, this Fibonacci spiral benefits from the preferred characteristic of intersecting with past reversal areas, whereas this one does not. It also has the disadvantage of flatter movement during and after a minor bullish reversal. In contrast, placing a Fibonacci spiral at this next upswing point produces a better result. There's still some minor congestion after the upswing, but Fibonacci spirals placed around this clearer reference point do a good job in coverage towards the area that is now becoming a sharp peak for a minor upward retracement within the larger downtrend. It also shows another case where there's the preferred characteristic of a spiral intersecting with a clear past reversal area. As a strong bearish continuation gets underway, attention can be focused around reorienting a Fibonacci spiral on this upswing point to get a short-term arc to go down and to the right side. But the portions of these spirals that are closer to their centers show intersections with price. We want them to extend a bit further than where price is currently at. And the outer portions of these spirals are quite wide, so they won't be useful in the short term and will likely be less reliable in the long term. Since the large drop is short-term context and we want coverage to the bottom right corner, it will be helpful to reference the most recent context. In this case, we're referring to the final portions of the minor uptrend we've just been looking at. Incidentally, pointing these Fibonacci spirals in the same direction as these last swing points in the upward retracement means pointing the first one down and to the right, and the second one up and to the right, to produce a V shape that was formed by the final downswing and upswing. And as usual, even though they're pointing in nearly opposite directions, the spirals follow a similar rotation, which is exactly what we were looking for. The spirals arcing down and to the right quickly meet falling price. The area of interest here is mid-November from the $10 to $15 range, which does oppose even this strong drop. Again, it's not a guarantee of support for a rebound. Had there been more bullish movement into December, basing spirals on this minor upswing point, along with some less than ideal bearish reversal areas, provided some options to capture minor rises in price. But overall, most of these spirals and their orientations were not suitable since they were either too small or too big, along with the unpreferred characteristic of the prolonged neutral movement that was followed by a decisive bearish continuation. As price goes lower and shows some minor signs of slowing down in the short term, it would again be useful to have a spiral getting coverage to the bottom right corner in the short term. Within this mostly flat bearish reversal area, this point is not the absolute high, but it's quite close and it's more recent movement. Using this bearish candle before the main drop can reveal some valid spirals that capture this area of interest for the downtrend, and as seen in other examples, the main interest for a downtrend is opposition to it. And unlike last time, there's neutral movement for only a short time before there's that decisive bullish reversal. So when price has an intersection with this spiral, we just know that's an approximate price and time range where the downtrend is more likely to pause or reverse. We don't know which one it will be by using the spiral alone. With a bullish continuation underway and no distinct swing points in the current uptrend or the past downtrend, we can place the spiral on the entire downtrend itself, which produces a fairly large spiral that could be acceptable from a bullish perspective, seeing as how there's currently a strong bullish advantage. And interestingly, here's the less common characteristic of a 90-degree angle formed with the pointer and uptrend when going directly from the start point to where price intersects with the spiral. Just something interesting to note, usually it won't be helpful because it's only apparent once price intersects with the spiral. Then there's that familiar alternative to just use the reversal candle. Extending up to the height of the previous downtrend isn't so helpful once the second bullish continuation continues because there's no steeper short to medium term coverage up in the direction to the right corner. If we just use points from the uptrend, the absence of any clear swing points after the initial reversal leaves us with the highest and lowest candle prices in the middle of the first bullish continuation. Not an ideal setup with less than ideal results. Then into similar setup and results with the second half of the bullish continuation. It's another example where in the absence of any clear swing points within this trend, a viable alternative is to use single candles. Specifically, some of the most important candles after that initial reversal candle that marked the start of this current trend. The first two of these kinds of candles are the ones just before and after the standard pause found in the middle of a continuation. We end up with some decent results with adequate coverage in the short to medium term towards the top right corner. Flipping these spirals to point down is only useful in the very short term towards the second bullish continuation, due to the much smaller area that provides coverage towards the top right corner. Another option is to use the points that define the first phase of the uptrend. In this case, from the initial reversal candle low, then up to the highest price in the first part of the bullish continuation, and then down to the lowest price of that pause in the bullish continuation. Again, this isn't preferred, but in this case, we get spirals that get good medium to short-term coverage towards the top right corner, which is suitable for this kind of situation where price is rising rapidly. Part of this is due to the good proportions formed by the two spirals. That results in a near 90-degree angle formed with the two pointers. In addition, there's the steep trajectory of the uptrend, which points in the general direction of the expected move towards the top right corner, and is virtually in alignment with the first pointer.